Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla. Let's figure out what has happened today, what we can expect moving forward. So as usual, if you enjoyed, don't forget to hit that like button. It does help a lot. This is not financial advice and I am not a financial advisor. And of course, my membership section on YouTube is live. The link is below where I share intraday thoughts on Tesla as it's moving throughout the day and whatnot. So the link is below for $3 a month if you're interested. But jumping right into it, Tesla closing the day pretty much flat. Honestly, pretty much literally flat. Actually, technically it was up 0.02%. Now you can see aftermarket it's down ever so slightly, pretty much not doing a whole lot, which isn't necessarily a bad thing or a good thing, because if you actually look at the candle, there was some decent action that actually did happen today. We just happened to close pretty much where we opened. Now let's talk about it. What does it mean? So this is not bad. Honestly, this isn't this isn't all that bad. Like, this is pretty decent, honestly, of a position to be here if you're a bull. But there's still a few things that are a little bit worrisome. So let's go over it. So first and foremost, we can see right here, we did come all the way down to about $202, right? A little bit lower than I expected, but we talked about this overall area. If we go to the weekly, this green kind of, very long horizontal rectangle, if you will, massive area of, in theory, demand, right? Why? Well, it's pretty simple. Look at the past, right? I mean, first of all, you have 200 itself-ish as a psychological level. We had a lot of support here. We had a lot of trading here. We had a lot of resistance here. We came up, finally blasted through it on pretty powerful weekly candles with pretty decent volume. And then we, of course, came back down to it over here, bounced off of it again, right? So it's just an overall massive area for demand or support in this case, right? Which is a good sign for the bulls. Now, moving back, also on top of that, on the weekly, we have the 200 moving average, which is sitting at somewhere around about 206, 207-ish dollars per share, which thankfully we bounced off of. Closing below this, would have been a little bit like, eyebrow raising, let's just say. But we did bounce off of it, which is a good sign and a good kind of start, if you will, here. So now, going back to the daily though, the thing that's good is what I just discussed, but the thing that's still a little bit questionable is this, right? We, of course, on the daily did still close below the 200 daily moving average. And not only did we close below it, we arguably got rejected by it. So, definitely some work to be done there in order to get not only above it, but more importantly, close above it. And that's what I was telling my members today. There's two things I want to see. Let's go to the 65-minute chart for this. Actually, no, we'll do the daily chart for this. There's two things I want to see. First and foremost, I do want to see at least above about 213, we'll say roughly, because that's where this candle over here, way back in August of the 18th, bounced, right? This is where we bounced. We came down also on a pretty decent sell-off, right? And then we had a beautiful bounce, made that island pattern, and we had a massive rally following that, which was great. But the point is the fact that we did bounce at the bottom over here, right around that kind of kind of 212, 213-ish area. And we closed pretty much right at where this was acting as a support. Now, unfortunately, seemingly at least, acting as a resistance. So that's not really ideal, right? Closing below that. I would want to see at least a close above that, but ideally a close above the 200 daily moving average, which is, of course, around about 215 right now, give or take. Right, so those are the things I want to see, right? We didn't do that, but we did bounce off of a very, very important area, like I said, which is, of course, that very, very low 200s, like 205, 202, 206, 7, just like that general massive range, right? Pretty much below 210, really. Huge area of, in theory, demand. And we so far showcased that, which is a good sign. But there's still work to be done, also on decent volume. Unfortunately, this candle isn't showing too much information. If you look back over here, I talked about how, if the daily candle closes looking anything like this, a phenomenal looking hammer candle. Clearly, it didn't, right? It very clearly did not. So we're not getting a doji candle. I mean, I guess you can make an argument it's a doji candle, but it's not like it's, with a grain of salt kind of doji candle. I wouldn't take it too seriously, in my opinion. So the candle's not really showing us too much information other than there was a massive battle. And overall, the bulls won, of course. The bulls definitely won, but there's still work to be done. Now, going over to the 65-minute chart, this is where things will get a little bit more interesting, because this, in my opinion, right now, the 65-minute chart is probably even more important than the daily chart. The most important thing about the daily chart is, do we hold that very low 200s and do we break above, ideally, the 200 daily moving average? But what can dictate that and how we can get a better understanding as, will that actually happen or not, in my opinion, is a 65-minute chart and a little bit earlier or a lower time frame we'll talk about soon, like the 50 or 30-minute chart, which we'll get into right after. But the 65-minute chart, one thing that's showing me here, or actually two things that's showing me here, are as follows. First and foremost, we have a nice little bullish divergence on the RSI, because as you can see, ever since this fall over here, pretty much, right? Even arguably this candle here. But the point is, as from this candle, let's just say, we kept going down right like this, you can see, right? As we kept doing this essentially. the RSI was doing pretty much the exact opposite, right? You can see as we're making lower lows, the RSI is making higher, right? So as the stock is going down, right, the RSI is going top right, if that makes sense. That's the easiest way to put it, which is a bullish divergence. That's a good thing to see because as it's going lower, 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 this is going higher, 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 higher. Good start. I like that. On top of that, the MACD on the 65-minute or 1 hour chart is looking pretty good, right? We flipped bullish, we crossed the green over red, which is a good sign. You know, it's kind of slowing down here a little bit, which is fine. Nothing wrong with that. A little bit of a cool off potentially, right? You know, we kind of chill a little bit, you know, get the steam going again, and then we make the next move higher. So all in all, the point I'm trying to make here is that pretty decent signs, at least for the short term, right? But the reason I say this is important is because if the short term like this is looking potentially bullish and it's looking like we're basing and getting ready to actually finally get a bounce, that bounce will most likely lead us back above the 200 daily moving average. So it's almost like a cause and effect, if that makes sense. So that's kind of why I was saying how it's an important area to look at. And as if that wasn't enough, another thing I'm looking at that's, you know, pretty good to see so far is this, right? This is what I just talked about as well to my members somewhere up here, right? Where we potentially could be making a nice looking inverted head and shoulders pattern. So we have, you know, nice little head right here, right? Then we have, what is going on here? Let me go ahead and bring that back. Right, and then of course we have the potential a left shoulder here, right, and then of course we have the potential right shoulder developing right here. So we can have a nice little, again, it's not a massive head and shoulders, or I guess in this case, inverted head and shoulders, which is the bullish one. It's not huge. It's not like some crazy massive one that's going to skyrocket us back to all-time highs. It's a very short-term based one. Of course, it's a small inverted head and shoulders, but nonetheless, it's still a very nice looking inverted head and shoulders. And if we were to, in theory, break, which essentially would be a break back above, really back above the 200-day moving average, like I said, around 216, right? Maybe even a little bit higher, but about 216 of a break can trigger this. You know, if we were to do that, that would be a decent move, and that potentially can bring us back to almost the 230s, right? That is a very real possibility, right? So that would be a decent move, even from this closing price right now. If it were to play out roughly in that fashion, that would be a solid like 7 to 8% move from now, right? Which is pretty respectable. That's nothing to laugh at, of course, right? So that is something that, you know, is important to take into consideration as well, right? That is something that I can definitely foresee happening, and it really wouldn't surprise me whatsoever. So those are overall the main things I am personally looking at as of right now. We have the order block flow, which isn't giving us too much information. The next one, I guess, is all the way down here. Then sell order blocks are 260, right? So buys are 160, sells that at 260. So not really getting too much information there on the daily, so that's why I'm not talking about that too much. We have the pivot, which, you know, I don't think will give us too much information here. Yeah, it's not giving us too much information here either. This is usually one of those extreme type indicators I use where it only really matters to me if we get to an extreme level like this, where you have essentially that kind of transparent looking background, if you will. That's when it's like, okay, well, now it's important to pay attention to. We're not getting that. We're not even close to it, so irrelevant to me. But all in all, that's kind of the way I'm looking at it, right? We have the Bollinger Bands you can see here. Let's remove the 200 daily moving average here for now. We have the Bollinger Bands you can see on the daily, right? You know, we're well below the red line, right? And like I said many times, you know, we got pretty tight, right? And then, you know, we always talk about whenever you get to an extreme, in this case, you know, very high up, closer to the green line, or in this case, well below the red line, which is where we're at right now, you don't maintain that for very long. Like, it can still, of course, last a bit longer, but ultimately you'll eventually get a bounce, usually to the median, which, as I always say, is the white line. We always revert back to the mean, right? So that's kind of usually what happens with this. It's not really a matter of when, it's a matter of, it's not a matter of if, it's a matter of when. And that's kind of what this is. But of course, that also means that we can still technically go down lower. And as we take longer, this will slowly come down to meet us. So technically that revert back to the mean will kind of get like lower, if that makes sense. But nonetheless, it'll still be a bounce. So those are the main things I'm looking at right now. And the final thing we'll talk about very quickly as I remove this indicator and bring back the 200 is going to be options flow. Let's take a quick look at options flow. Let's see what it's telling us right now. I just shared this with my members as well. There's one important thing to note, right? On the left here, all these circles look really small, but in fact, they're actually still decently sizable. This is a 1.1 million print over here, right? 232 puts, etc. Right? So nothing to scoff at, even though they look small and irrelevant. And the reason they're so small and irrelevant is because this bad boy exists over here, all the way on the right, which I am slightly blocking. So I'll move my camera here. It is a 175 put expiring in January of 2026. So it's well ways away. Could be a massive hedge. Could be someone that, you know, they're just hedging against their shares. Maybe they're just actually bearish. Who knows for sure what this is and what the means to this really actually is. But it is almost like 3 million premium in puts over here. So take that for what it's worth as well. Figure that share. Again, it's extremely far away. 2026, right? Pretty much 3 years. Oh, okay, I guess it's not 3 years. It's probably like 2 and like a quarter years away, roughly, I would say, ish. But, you know, regardless, take it for what it's worth. It is there. We'll see if that changes. Maybe we'll go down a little bit lower. I don't know, but I am still kind of, I did buy the dip this morning. I bought it at, I closed my window. I think I bought it at 207 and then I sold it at almost 213. It was like 212 and a half. And now I'm chilling. I'm chilling. I still have shares higher, but I still have about 20% cash that I'm willing to buy the dip with. But I want to see what happens here before I go too far into it. I bought the dip earlier this morning because it was just, that was like the area I was looking to. I even told my members, this was, where was this? I said it right here. Oh yeah, we'll talk about this quickly too, actually. But I want to talk about this right here quickly. Where is it? Right, this was the bounce we talked about. Not that. That's not that. I think it's this one here. Right. This has entered my area of buying the dip here. Right. This was back when we were at about 205, 206. And I talked about how I didn't say I'm buying the dip, but obviously, I wouldn't say this is my buying a dip area if I'm not buying the dip. That doesn't make any sense. But I did buy it and I did sell it after because I'm not taking too many risks right now. But one last thing we'll talk about very quickly is going to be this little chart right here. Right, this is a pretty important chart, right? S&P 500 midterm election year seasonal pattern since 1946, right? Right now, we're currently in the second year Democratic president, new Democratic president, of course, Joe Biden. And we are currently, I believe this is the second year, if I'm not mistaken, correct me if I'm wrong, but I'm pretty sure this is the second year. But nonetheless, we are assuming it is the red line, which you can see here moving into November or end of October, moving close to November, massive dip, massive pain, which is essentially what happened to Tesla, massive dip. And then we get a base, and then we get a bounce and a rally into November, and the first about week or two of November as well. Get a bit of a dip, and then continue on for the Christmas rally. Again, doesn't mean it has to follow this pattern. Maybe it will, maybe it won't. But something to note and something to pay attention to regardless. But all that being said, thank you so much for watching. If you enjoyed, don't forget to hit that like button, and I'll see you tomorrow. Peace.